Hey guys, it's Willie. Today I want to take a look at Hewlett-Packard, or HP as it's more commonly known now. Right now is trading at 37.54 over the past 6 months, up 36%. But as you can see from the chart, it really happened in one particular place. Right here it's up 39%. And then it's just been kind of jumping around within this region here between 35 and 40. Kind of jumping around. So, to preface this video, I'm going to say that I like HPQ. I have it as part of my portfolio. I am long HPQ. Just in the interest of transparency, just so you guys know, I do own HPQ and I do like it. But, as always, I want to provide research and numbers that back up my position in HPQ. So we come over here to our spreadsheet to look at the financial data. So again, the stock ticker is HPQ. There is another stock ticker. I think it's just HP. And that's the stock ticker for Hewlett-Packard Enterprises. It's slightly different from HPQ. HPQ, I believe, is more of the computer business. HP, the stock ticker HP is slightly different. I think they focus more on services. But anyway, let's focus on what we're doing right now. So as always, we're going to take our first look at the numbers coming into the business. The one unfortunate part about this is early on in this data set, you're getting weird numbers. So your revenue over the past 10 years technically went down 6.2% a year from this $120 billion down to $63 billion. However, you can see a big drop between 2013 and 2014, likely, selling off a division or something in there, and then, riding out the revenue. Revenue from there has been trending upward, so that's good to see. We'll give it a good on the revenue side. Net income, you're seeing a fluke year in the beginning, and then you're seeing lackluster growth, big jump from 2020 to 2021. Don't particularly know why that was. 2018 to 2019 there was a drop. Big jump from 2017 to 2018. It's volatile. I don't quite understand why it's so volatile. But if you ignore this number here and say, okay, we're gonna normalize it to basically 2013's number, say it's 5,000, you're looking at 2.6% from here to there over the past 10 years. So, you gotta ignore these fluke years in here, guys. You gotta ignore them because it'll throw off everything. Free cash flow per share, big numbers in the beginning, dropping down and then kind of slowly growing up from there. It's weird how volatile some of this stuff is. I don't quite understand why HPQ is so volatile. That could be something that would be worth looking into for further research in the 10Ks and reports and all that stuff as to why these numbers are so volatile. Anyway, moving on. Shares outstanding, something I really love about HPQ is that they're buying back their shares at minus 4.7% a year over the past 10 years. You've gone from 1.9 billion shares down to 1.2 billion shares. That's stellar. That's absolutely fantastic. So if you bought here and you held all the way until now, and you didn't buy any more shares, you now own a higher percentage of the business. That's why we love companies that buy back their shares. Earnings per share, free cash flow per share, basically the same story that we're seeing with the net income and free cash flow, some volatility in there. However, these are more generally trending upward due to the slow trend upward of the underlying net income and free cash flow numbers, as well as the steady decrease in the shares number. So decreasing shares helps these numbers go up because you're dividing by a smaller number. So, yeah, good growth out of that. Total assets, here they are, if you want to see it. big drop between 2015 and 2016. I don't know what that is. I don't know what went on. But then again, I don't really much care about assets. I'm focused on revenue, cash flows, the ability of the company to make money and do business, rather than a company being able to have, cash in the bank. I mean, if a company can have $1 million in the bank and be making no money, versus a company that's making money and has no money in the bank, which one's the better company? I'm going to go toward the one that's making money, if I'm honest. But yeah, anyway, dividends, for my dividend investors out there, good growth, really good growth out of the dividend. Slow but steady. Steady, no cuts in there. Really good growth out of HPQ, looking like they can sustain this growth. Hopefully so. Total debt, here we go. Okay, $40 billion in debt. Cash, this is where I start to get a bit worried. Cash has been dropping over time. Not a huge fan of dropping cash. I'd like to see debt dropping, but as you can see, debt has kind of been going up. It went from, aside from this big drop here, you went from 32 to 40. That's going up. Your cash is going down. Not too happy about that. That results in your net debt coming up over here. You're looking at almost $36 billion in debt on $5.8 billion in free cash flow. That's a lot of debt for that amount of free cash flow. We'll look at the ratio here in a minute, as we always do. But yeah, looking at that debt number, guys, make sure you're comfortable with that if you're going to enter into a position. That's part of doing your research. Make sure you're comfortable with the debt levels. ROIC, I don't think I've seen numbers quite this large out of a company thus far that I've looked at. 68% ROIC for 1 year is absolutely outstanding, but they've done it before. They did it in 2018 at 62%. I mean, I don't know how you can manage to do, these high returns on invested capital. I don't know how you do it, but it's absolutely fantastic that HPQ is able to pull that off. Really good job at taking their money and making investments with it and putting their cash to work. PEs, price to free cash flows, based on the current number or the 5-year earnings and free cash flow numbers, looking like it's cheap. All of these numbers are in our green area under our 20 metric. I should probably change that to 20. I like just 20s all the way through. That would be better. This research process is never the same. I'm always coming up with new ideas and changing it slightly. But always focusing on free cash flow and value investing and all that stuff. Anyway, I'm going to stop rambling as much. Price, good, looks like it's cheap. Net debt, again, 8.5 times the average 5-year free cash flow to net debt. That's high. That's really, really high. Make sure you're comfortable with that going in. I think HP is a good enough money-making machine that they'll be able to manage this debt over time. However, I would like to see it start coming down rather than going up, and I'd like to start seeing this cash come up. However, they need to rearrange and allocate capital to get that done. Go ahead and do it, but I think that's what needs to be done. Revenue growth, earnings growth, free cash flow growth, all positive, good. Shares outstanding, minus 6.4% over the past 5 years. Great. ROIC above 9%, solidly above 9% at 47% average over the past 5 years. Absolutely outstanding, HP. I really don't know how you manage that with the ROIC. Moving on, coming down to our forecast, you're looking at currently $4.78 a share in free cash flow, and you're looking at $5.33 in net income per share. I have decided to keep a 0% growth rate for net income and free cash flow over the next 10 years. There's been a lot of volatility. There's not really been a clear direction that the free cash flow and net income is moving. It seems to be in a more positive direction. However, again, that could just be the volatility and my brain coming up with a pattern that isn't there. So I kept it flat. I think this is a very conservative assumption. HPQ should be able to at least grow with inflation. Really, every business should be able to grow along with inflation. So 0% is a very, very, very conservative forecast over time. Also, the PE and price to free cash flow multiples are 10s. I have lowered that again to be conservative rather than the usual 15% I use. 15 multiple is the market average. So here I'm being extra conservative and using a 10. So based on free cash flow, you get 47.76. Price target in 10 years based on net income, you're getting 53.30 in 10 years. We come over to the side. Over here, you're in at 37.54 right now. That's the current price. You've got our two price targets. Average those two together, you're getting $50.53 in 10 years. So let's look at what that means for us in terms of return. You're in at 37.54. You're getting this stream of free cash flows of $44.78, and you're out at $50.53. That's a 17% annualized rate of return based on an IRR basis. That is 6.2 times your money. And this number, again, I think this is a very conservative forecast. I think these numbers should generally trend upward from here. I think that would be great. That would increase this number. The multiples may be higher. That would increase this number, increasing your return. So as you can see, this is why I own the stock, because I think it is cheap enough. And I think if you're making such conservative assumptions, at 0% and low PE multiples, and you're still getting 17%, which is markedly above market, significantly above market. 10% is market, 17% is above market, really solidly above market, really good return, 17%. So yeah, that's really all I have to say about this initial screening of HPQ. Look at the debt if you're interested in making a position in your portfolio of HPQ. Definitely make sure that debt is something that you're comfortable with. But beyond that, I think that HPQ is cheap enough and making conservative enough assumptions, you're still coming out with a solid return. I think it's looking pretty good. As always, like, comment, subscribe, all that crap. Comment below if there's any stocks that you'd like for me to do. I'll take a look at them using this sort of screening process and see what I think about them. Also comment any sort of suggestions you guys have about improving the channel. I'm always interested in hearing what you guys think and what I should do to make this better for everybody on the YouTube platform and everybody out there on the internet. But anyway, thanks for watching. I really appreciate it, and I will catch you guys in the next video.